Hey guys, welcome back in another recap video. This one is gonna be fast because in the whole week I just took one trade on stocks and one trade on forex, so it's gonna be very fast. But because of transparency and honesty, because I promised to you, transparency and honesty, I just want to do this breakdown, even if it's only two trades. But also because I want to show you the consistency in the execution. Setups must be boring. If they are always the same, then you can reach the profitability. If they are not always the same and you are always changing some detail or something, unless that detail is backtested, that is what it's keeping you from being profitable. So this is very important. Let's go and see the two trades from this week. One from SMCI, and it's this one. So as you can see, again, I always try to show you what I look for and what I see in the charts, and I hope that doing that you will be able to see that every single setup is the same, even if it's slightly different, because obviously the price action can be always the same, but it's always the same, slightly different. Okay, and this is what you need to look for. So in the upper right we have the context, and so the context time frame, as you can see, it's a delivering market, and this is what we want to see, a stage 2. Then we have in the V time frame, bottom left, we have an impulse, a big impulse, and a pause. The pause must be clean, not too many wicks, not too big, too aggressive. The sell-off must not be too aggressive, and it has to pause on the 5, 10, or 20. So this meets the requirement. And then the entry, as you can see, price is, we have a flush, okay, going below the 20, and then we have price just forming the simplified wyckoff, because if we went on the lower time frames, we would see a wyckoff. Okay, so if we went on the 30 seconds, 50 seconds, we would see a wyckoff, a perfect accumulation schematic. Okay, so this is my entry. Okay, if this is the first video that you see, this is my entry. I wait for a sort of double break. This is called double MB. Okay, and then when the double MB presents itself and the second MB is above a rising 10 or 20, as you can see, I just take the trade. And this ended up to be a break even. I just moved to break even here because it was just 1-to-1, and then we had 3 candles. So basically in a lower time frame we had 1 or 2 break of structure. It depends on how you see them, but it was 1 or 2 break of structure. So when I see that price is almost at 1-to-1 and in the lower time frame, even if I don't go in the lower time frame, but I know that in the lower time frame there was a break of structure or 2 break of structure, I just move to break even, because if price wants to go, it should not come back. So this is the whole reasoning behind my rules, to when to move to break even. My break even is very fast, so even when I'm wrong, I don't lose anything. So this was wrong, and so it took me out a break even, and this is how the stock then developed. So as you can see, this was not a deliver, so the break even worked very well. Then we have another trade, only that trade on stocks. So this is why I'm saying you that the consistency in the setups will bring you to trade way less than what you are expecting. Sorry guys. And so this is very important. We have we have to say that the Monday was the 25th of May, so the markets were closed, and then on Tuesday I had personal commitment, so I couldn't trade, and so we have left Wednesday, Thursdays, and Friday, and in 3 days I was able to take only one trade, even if I on the lowers. So I just want to make you understand, make you reflect, and notice this detail, that even if I am on the lowest time frame and I enter on the 3 minutes, that doesn't mean that I have one trade every 1 hour, every 2 hour, every 30 minutes. Okay, sometimes I have one trade a day, but sometimes, okay, this is very, very important. So I took a trade on SPX, so and S&P 500, and this was the trade. So again, really, as you can see, really trending environment in my context time frame. A big impulse and a decent pause. I mean, this was a big pause, but the sell-off was not too aggressive. There, as you can see, there were not, two weeks, so the pullback was not too weaky, and the overall setup was a good one. And even in the E time frame, as you can see, the sell-off is contained, it's not aggressive. And then I have my double break system, so the double MB, and as you can see, the entry is on a rising 10 or 20. In this specific scenario, it's on a rising 10, 20, and 50. So this was perfect. And in this specific scenario, when price, we have two candles, as you can see, 1 and 2, and then price went back. When price tried again to let's say break that high, but there are weeks, so this is showing us there is no strength behind the move. In that specific situation here, I moved to break even. I actually was waiting for price to break this previous week, because that was the break of structure that I was looking for, because for the forex and commodity markets, I usually leave the price action more space, because it is not directional like stocks, but sometimes price goes, then goes back, and then goes again and continues the trend. So I want to leave more space for forex and commodities. So this is why the rules, the break-even rules, are not the same. But yeah, I wanted to put the break-even once this high, this week was broken, but as you can see, price didn't show me strength, and so I put to break even when price was here, and it was a wise choice, because as you can see, then price just went sideways. So this is why I'm saying you that when you not all the system are equal, are the same, but usually when you develop a system in a trend following let's say wise, so it's a system that usually follow the trends, and it's a breakout system. The break-even are very, very fast, because usually when price validates where it wants to go, it doesn't come back. So this is very important, because I think that in trading we need the losses, because we need to be wrong in order to prove our edge. But if we are able to move to break even as fast as we can, because we know from the test that our trades, once they go and don't come back, it's not necessary for us not to move to break even as fast as we can, because that is capital prevention, capital protection. You can call it whenever you want. It's just maintaining our equity curve sideways instead of going lower because of stop losses. Because the more the equity curve goes lower, the more difficult is to, let's say, recover the new all-time high, because you are going down. If you are able with break-evens to protect your equity curve, the bottom of your equity curve, that is the game. So this is why I have these rules for the break-even, where I break even the trade as fast as I can. So to trade, as I say at the beginning, so yeah, it was a slow week, but things are starting to change. I hope next week I will be able to show you something better, because I'm thinking of not stopping the session after 3 hour, 3 hour and a half, but I'm trying, to do all the session till the end of the market close. So I've noticed that 1 or 2 hour before the market close, we have a lot of trades that deliver. So I missed a lot of trades, and I don't want to miss a lot of trades. So since I saw that I have the time to open the trade, even if we have 2 hours left, to the market close, I think it's wise to stay in front of the chart 1 or 2 hours more to understand if I have the possibility to take one of the last move of the last 2 hours, because I saw that there are a lot of trades that really take off 2 hours, 1 hour and a half before the market close. So this is the change, the little change that I want to make from the next week. So I'm thinking that if I would be able to be consistent with that change, I would be able to show you something different, okay, than obviously the all the break-evens that you saw in the equity curve and in this breakout. So stay with me, okay, because I know for sure that the next breakout will be something very, very, very amazing. Okay, we are just trying, and we will be able to recover the equity curve. I can feel it. And yeah, thank you guys for being with me for another recap video. Just drop every question in the comment below. I will answer you back as soon as possible. Just if you like the content that I'm bringing to you, just subscribe to the channel and be sure to be in the chat in the Telegram group. Thank you guys, and we are going to see in the next video that will be the monthly, okay, recap. So we have the weekly and we have the monthly recap. So stay with me, because in the next video we're going to see the month of May. Thank you very much, guys, and to the next video.